Well, hi and welcome. Good morning to you. We're live here on YouTube. All is looking good down there. Hope everybody's really well. It's a great day today because it's like February next week, and February brings the spring and all those good things that come with it. Welcome to your CeMAP Bootcamp live stream today. Got a few topics for you to interest you. These have come through from questions from listeners and people on the boot camps and stuff like that. So first thing to talk about really is a bit of an update before I take a look at middle-age lending, as I call it. And then we're going to take a look at some fact-finding tips and techniques for you for the next 20 minutes. So what's been going on there? Well, Moody's, who are part of the credit rating people, have come up with their report for 2020. And it's pretty good, actually. I must say they're well-researched and information they've got. And they've got a number of things going on. They reckon the economy is going to be holding up with post-Brexit situation going on. There's a bit of a Brexit bounce going on here, but the GDP growth is going to hold up for about a year or so, at just under 1%, which is probably about right. Whether we'll have a downturn the following year, we don't know. Employment's up, so that's all good news for you. And the Monetary Policy Committee are meeting this Thursday to talk about interest rates. What are they going to do? Probably maintain them as they are. CPI, the Consumer Price Index, was pitched at 1.4% in December, so that's holding down nicely, isn't it, really? I think oil prices are coming down, although I thought around it went up again, but then again, the US is a net exporter of oil now, so they don't really care what's going on over there now when it comes to oil, but that's another story. Now, what else did Moody's do then? Well, they talked about longer-term fixed rates coming about and all those aspects of indicating things going on. Because Moody's, of course, are the people that really matter when it comes to it. They reckon that growth is going to be fairly subdued as well. What's going on in the mortgage market? Well, they reckon that a lot of newcomers to the market are going to be dealing just in sort of vanilla mortgages. And a lot of these are going to be taken over by technology. Now, everyone keeps saying this. I've been saying it for years. And now you've got people like Moody's saying the same thing. Newcomers to the business and the big banks are going to be investing heavily now in technology to deal with vanilla mortgages. And it's the specialist stuff that'll be a lot low key, really. And they'll get slightly riskier as well. They'll start doing some slightly riskier lending as well as time moves on. So that's Moody's, really. Lots of stuff going on there with the marketplace. We've got landlords, of course, causing an awful lot of problems as well. Their marketplace is changing dramatically along the way. Sounds like a bit of an earthquake going on here, doesn't it? I think we probably have got an earthquake here in Cheltenham. There's lots of noise going on, so bear with me as we talk through. So let's get on to our first topic, really, then, I want to talk to you about today on our live stream. The first sort of major topic, which really interests me because I guess I'm one of these, and we call it middle-age lending. Let's get the focus back again for you so you can see me clearly. Middle-age lending, this one's called. So I've entitled this middle-age lending. And I guess I'm middle-aged. Call it what you like, really. That's the title of this one. A lot of us talk about the latter life market, don't we? The latter life lending market. And we're quite happy to talk about those things all the way. And the latter life market's great, but now we need to talk about middle-age lending. Now, these are people who are not older or young, but they've usually got lots of kids who have grown up now and left the nest. And what they're doing, of course, is they're sitting on a very nice property, which they probably bought in the 80s, probably stepped up in the 90s and noughties. And this property is worth an awful lot of money. And that's the whole point, you see, because these are often known as BOMAD, the Bank of Mum and Dad. Probably heard that phrase before. So let's just put Mum and Dad in here for you. We'll be stereotypically correct here. You know, there's Mum and Dad with the dog. Let's do a sort of a Lowry dog, shall we? Went to see the Lowry Museum. Brilliant it was. There's a Lowry dog there for you. And BOMAD, Legal & General reckon, are one of the biggest lenders in the UK, the 11th biggest lender, apparently, if they were a mortgage company. Almost £6 billion the Bank of Mum and Dad are lending to their kids. And this is where it comes into the mortgage market. We need to take a look at how this works. There's a number of things that they can do, Bank of Mum and Dad. I want to talk you through these now, because you'll come across this as a mortgage broker quite readily as well. The first thing they can do, of course, is they can raise money from the property itself. They can raise a lump sum of money by remortgaging the property in the normal way, or further advance, whatever is second charge, whatever is your poison. But you can remortgage the property and raise some money, and you can give that to your kids to do what they like with deposit on their house, for example, is a big one as well. All sorts of gifts outright. They've got to look at inheritance tax, but these people are not old. They've probably got quite a few years to live yet. So they don't need to worry too much about that. They could also help their children to buy a property in the first place. So let's put the kids' property over here, shall we? Let's make it a smaller one so we can see the sort of context that we've got here. That's the kids. Maybe there's one of them wants to buy a property. So what bank and mum and dad can then do is they can provide what they call the guarantor. Now the guarantor is coming back into fashion big time now. They can guarantee the kiddie's mortgage. They're not on the mortgage deed or anything like that, or even on the property deeds, but they guarantee the mortgage. And that in itself allows the kiddie wing to borrow that much more money from the lender. And lenders, smaller building societies are definitely into this type of lending because it's good stuff all round. Now, in the same manner, they could provide what they call a surety. Now, a surety, which is coming back into fashion as well, there you go, is where bank and mum and dad provide a lump sum. The lump sum goes to the lender. So let's just put the lender in there then. So that's the bank or whatever it is it's lending. The surety goes to the lender in the form of a deposit account. So it's a proper deposit account. They earn interest. So the lender will pay them interest. Yeah, let's make sure we've got that. To bank and mum and dad over there. The money is kept on deposit, can't be withdrawn. It's provided as security for a larger mortgage that the lender's going to give to the young couple. That's known as surety. If you think they're a bit old-fashioned, they're not. Look at Halifax's latest interest or mortgage rate advertisement. They're promoting surety-based mortgages, which are brilliant things, aren't they? Other things they could do? Well, mum and dad could buy the property outright. Yeah, they could purchase the property themselves. And maybe as a second property, if it's a university town, maybe they can then rent it out to the youngster who's at uni. That's quite a common thing to do. In fact, we're selling our kitchen at the moment because we're having a new kitchen fitted, so we sold it on eBay. How cool is that? And the bloke that's buying it has got himself a property in South Wales, which he bought for his daughter who's going to uni in Cardiff. And he's buying our kitchen and fitting it. So people do that. Obviously, there's implications there because it's a second property, so there's extra stamp duty to pay. There's a second property interest rate mortgage kind of thing coming into its own. So it's a proper purchase. You've got to look at what mortgage they've already got on their main property. So that's another way that they could help. A couple of other ideas for you. There's a new thing now called joint borrower sole proprietor mortgages. Joint borrower sole proprietor. Horrible name, isn't it? Basically what happens is the bank or the lender lends money to the youngster, but these people join in as joint borrowers. So say it's mum and dad, and the little child, they're the kid. They're joint borrowers. But it's a sole proprietor, so that the young person owns the house, the parents don't own the house, but the mortgage is in the joint names. So it's great to think about it because the lender's happy because they've got mum and dad on the mortgage deed, making payments happen, of course. Little one's happy because she owns the house outright. So this should get away with first-time buyer stamp duty. You should get away with buying a second property if it's not a second property, effectively, because only the youngster is on the deeds of the house. So there shouldn't be any extra stamp duty to pay on that as well. So it's a pretty good deal. That's known as joint borrower sole proprietor mortgage. And a lot of lenders, small building societies, are doing those as well. The last one, of course, is to remortgage the property, maybe to pay off their Help to Buy government loan. Maybe the youngster bought a property with Help to Buy and the government loan's up for renewal, and therefore they can organise that and make sure that they've got the money to pay off the government's Help to Buy. So that's another way they can help. There's lots of things that they can do. And that's the whole point, really, because these people can help their kids. So what are their needs themselves then? What's this middle-aged couple's needs? Well, they may well have a interest-only mortgage. So let's just put in there, the mortgage there. They might have an interest-only mortgage that they took out in maybe the early noughties. Everybody took out interest-only mortgage with no repayment vehicle. So if that's the case, they've got a few issues coming up because they'll need to do something about that. Now, their mortgage term may well be coming to an end, and the lender might want their money back. So often what's happening now is these people are converting those into RIOs, retirement interest-only mortgages. A retirement interest-only mortgage is an interest-only mortgage which has no end dates. So they're really cool things. And that's a big marketplace coming through now. So that they could certainly remortgage or convert their mortgage into one of those as well. Um, they might want to move house, buy a new place, bigger place maybe. A lot of people talk about downsizing nowadays. You know, people don't always want to do that. They might want to buy a bigger house because, you know, they might want the kids back at term time, or maybe at Christmas. They might want the spare bedrooms. They might want their own gym, their own jacuzzi room or whatever. People like to have space now, and these people, of course, have been used to this space, and they've got a good pension income to upkeep the house. So if they want to buy another house, they can get a mortgage now way into retirement. That's latter life lending. You know, ask my bank, they lent me a mortgage until I'm 80. So, you know, people will lend now long term if you've got a good income as well. Now, if you're interested in this marketplace, then you have got to target these people. Very wise, experienced, good income, busy, been around the block, bought and sold properties, know about mortgages, know about salespeople. Be careful how you deal with those people as well. If you want to target them, ramp up your marketing engine so that you get referrals. You don't want to do anything else. If you're a small brokerage, you haven't got the money to advertise big time. So it's referrals that you're looking for. You're looking for existing customers to pass these people on to you, referrals. So talk to me about referral training if you want some articles and things that I write about the topic, because you really do need to get those. Referrals are easy. Find them. Where do they hang out online? Maybe connect with them and somehow. Go and talk to them and you know, get all this business, because there's plenty going on. That's the middle-aged lending market. That's useful. There you go. Do you like that one? That was quite useful, that, wasn't it? Quite useful, that. I'm into this market. It makes you think about stuff. You know, we all bought up the Maggie Thatcher and Right to Buy. We all owned properties at an early age. We all managed to buy our properties at an early age as well, which is great news for all of us. And here we are now sitting on property. Obviously there's divorces and things which tend to split the capital growth, but you know, it's just the way it goes, isn't it? Hope you found that useful. We'll move on to our last topic now for you. This is quite an interesting topic actually, which you need to be really good at. People forget this. The FCA were doing some research into this particular topic. I'll tell you about it in a second. Let's take a look at fact finding. Let's take a look at fact finding. Now, the FCA were talking about this the other day, and fact finding, of course, is a major part of any mortgage interview. Don't know why we call it interviews, horrible term. And the FCA were talking about the quality of fact finding is pretty abominable, and that's their decision, not mine. Because fact finding can be a form filling exercise, or it can actually be a really good experience. It should be the latter. The whole point about selling or advising, call this what you like, is you must find out the client's needs before you can recommend a product or a series of solutions. And we call it fact finding. The problem is compliance rears its head and starts putting all compliance-y stuff all over it. And we start to make it sort of mandatory, and we've got forms and we've got sections and all sorts of things going on. But what I've got for you now are 10 top tips. Yeah, the top 10, Paul's 10 tips to revolutionize, if you like, or rejuvenate your fact finding. See if we've got some ideas for you to help you when you come to fact finding. And the first thing you need to be careful of, and I'll put this over here for you, is make sure your non-verbals are doing what they should be doing for you. Now, your non-verbals, of course, are things that you do without talking. So your eye contact, make sure you do your eye contact, your open body, use of gestures, raising your eyebrows, tilting your head. All these things can encourage the customer to talk. Now, the whole point about the fact find is that you need sort of an 80-20, don't you? You need customer talking 80%, you talking about 20%. That's the best measure of a decent fact find. I think it should be a lot lower than that as well. So make sure your non-verbals are working for you along the way. The next thing is be comfortable with freewheeling. There you go, freewheeling. Now, freewheeling, of course, is a term used to describe the fact when you just go with the flow, really. Let it happen, man, you know. Don't be tethered to the strict order of your questions. Be prepared to let the customer ramble on about different topic areas and maybe probe further into that area, then maybe pull back again. So, for example, when you talk about their employment, ask them about their current job, and if they start talking about it, just keep probing. Where do they used to work? What are their ambitions the next 5 or 10 years? Where does their partner work? Are the children working now? You know, focus on that topic and just go with the flow. be comfortable with freewheeling, which is a great thing as well. Non-verbal nods are great, but remember your verbals. I see. Yeah, I understand what you're saying. That's interesting. Really? Keep going. These verbal nods, you're nodding your head effectively. That's a non-verbal, isn't it? But you're saying these things, these little words, which keep people talking along the way as well. So that's a nice little one for you as well. The other one to think about is what we call pre-framing. There you go, pre-frame. Now, pre-framing is an NLP term. As you know, I bang the drum for NLP a lot. And pre-frame is where you pre-frame your question with something that softens it. So, for example, if you wanted to ask a question such as, have you sorted out what's going to happen if you die? You know, which is a big question to ask. It's quite sensitive. What you want to do there is you want to pre-frame it, and you'll say, Mrs. Brown, I hope you don't mind me asking, have you done anything, prepared yourself for the prospect of dying early? You know, you don't mind me asking, is it a fair question to ask? I'm curious to know. It would be really interesting, Mr. Brown, if you could tell me about your current employment. It would be very useful if you let me know about your existing mortgage. So these are what we call pre-frames. They sensitize the subject, they desensitize it, they make it soften the topic they're going to ask. That's a nice one for you as well. Here's one of my favorites. I call it MAP. MAP is the acronym. Map it out, I say to you, when you are listening to the customer. The big problem with listening, of course, is most of us don't do it very well. We're more interested in our next question. We're all more interested in solving the problem as the client's talking to us because our little brains are wearing away. So what we need to do with fact finding is we don't want to find any solutions, and we just want the customer to talk. So what you do is, the first thing is you move away from thinking. In other words, you stop your brain from thinking. Obviously hear them, listen to them, react to what they're telling you, but don't think about it. So move away from thinking is the first thing you do. Don't think about your next question. Don't think about the solution to the problem they're giving you there and then, because you'll stop listening. So hear them, but move away from thinking. Then what we do is we appreciate the customer. Now, by that I mean give them all the eye contact, give them all the non-verbals, make sure they know that you're listening to them. And when they finish talking, you merely play back what they just told you. Now, I did some coaching the other day for a chap, and we were online video, and he was telling me about his goals and objectives and stuff. And I thought to myself, let's just go into MAP, Paul. And I tweaked things around, and I moved away from thinking. I listened to what he told me, and I just played back everything he told me. Obviously, it's summarised. And as I played back what he just told me, he then filled in the gaps that I missed or the bit I got wrong. So he started talking again. And then when he finished, I played it back again. And obviously, as I was talking to him, I was doing that, really? Okay, I understand. Okay, keep going. I was doing all of that. All I was doing for about 15, 20 minutes it was hearing him, playing back what he just told me. He then talked some more. I then played back what he told me. He talked more. This one about 15 minutes. And he said to me at the end, he said, my God, you're a good listener, he said. I said, well, not really. I said, I'm just listening. Yeah. But you do need to focus on it. And MAP's a really good technique to help you along the way. The other thing you can do is you can soften your questions. Now, I talked about pre-framing them, you know, do you mind me asking, or is it a fair question to ask? But softening your question is you do something with your voice. And what you do here is you raise your voice slightly whenever you want to ask a question. So the one I asked earlier, tell me about your plans if you were to die early, is a question. I might say, Mr. Brown, tell me about the plans if you were to die early. What I'm doing there is my voice pitch goes up slightly. And that softens the question. That's psychology against NLP. And Mr. Brown, what I really would like to know is about your employment. So you're raising the question, that softens it. And if you soften the question, people are much more inclined to listen to your question and give you a great answer. Another one for you. I'm giving you 10 of these, which is a bit corny, really. And I call that wait. So when you're fact-finding, make sure that you wait. And it's a bit corny because it stands for, why am I talking? So if you find yourself talking away, just question yourself, well, why am I talking? What's the purpose of me talking here? I'm actually asking a question, or am I just gabbling on? or showing off or something. You know, why am I talking? It's something you need to use to stop yourself. One or two more for you. Make sure that you get rid of any physical barriers. Physical barriers. If you're talking to the customer, of course, the biggest physical barrier is the desk. If it's a great big desk, the customer's opposite you and you're opposite them. It's a big barrier. You might have a big computer screen on the desk, maybe a flat screen, but it's a barrier. You might have something in the way that's a barrier, physical barriers. Make sure you maybe go to the corner of your desk so there's not so much of a barrier if you need to have a desk. I think you need something to write on. I get that totally. So that's a big barrier. If you're doing fact finding online, for example, make sure there's no barrier. Now we're doing this online, we're on video. I'm talking to a camera. Obviously, I'm talking to you. I'm talking to a camera. I'm giving eye contact with the camera. Now my screen is down there. So if I look down there at the screen, as you know, what I'm seeing myself now, then I'm not giving eye contact. So if that was a customer online, that would be a bad thing to do. So make sure your camera is very close to the picture of the customer if you're doing online as well. That's a big, big barrier. Eye contact's the biggest barrier. You don't give it, people expect it. So make sure you get rid of any barriers along the way. Two more for you, final ones for you. When you do ask questions, make sure that they are power questions. Now I call them power questions. What is a power question? A power question has a number of attributes. First of all, they're short. They're not long-winded or multiple choice questions. They're short questions. They're usually open, talking about that in a second at all. They're usually very curious questions. So Mr. Brown, so tell me about your employment. It's not a bad question. It's not a power question. You could ask the question, Mr. Brown, tell me about your ambitions for your career. Now that's a power question. It's curious, isn't it? It's short and it's open as well. And on the last point then, let's give you a little bit of poetry. I love a bit of poetry. And this one comes from Kipling. Now Kipling was a great author and poet from the late 19th century, early 20th century. In fact, I saw the film about his son, Kipling's son, who served in the First World War as an officer in the Battle of Loos. A very good film was. His only son, he died on the front. It devastated him, apparently. But Kipling was a great poet, and he worked out in India for quite a while. And he had 6 honest serving men. They taught him all he knew. Their names were what, why, when, how, where, and who. Now these are what's called open questions. I have 6 honest serving men. They taught me all I knew. Their names are what, why, when, how, where, and who. And those 6 questions, or 6 openers, are what we call open questions. A lot of people poo-poo it. I think it's a good thing. I think all questions should start with open questions. You can use closed questions if you want to. Do you, would you? But it can be quite leading. Do you think? Do you, would you, could you? And if somebody's been a bit of a nuisance, they'll give you one-word answers. A lot of people don't. But open questions, short, power, will give you information. And if you add in your non-verbal nods, your verbal nods, do a bit of freewheeling, soften them at the same time, get rid of any physical barriers, then you'll get your customer talking to you. And then make some notes if you want to. Use your fact-find form, of course. If it's online and you're typing in as they're talking, that's very difficult for the customer to keep talking, because by its very nature, you'll go offline and stop giving them eye contact. I've seen that a lot. Terrible. Customer stops talking because you're typing. Ugh, comes an interview. Don't do it. Find another way. Learn to touch type. I can touch type. Customer talks to me, I can type. Learn to touch type. If you're in training, teach your people how to touch type, or buy an online course for your people to touch type. So that way you give eye contact. It makes all the difference along the way. Anyway, 10 top tips. I think there's 10 there for you. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Here you are. I promised and I delivered. There we are, some ideas for you. Hope it's been useful. There you go. So that's a little tip for you. Hope that's been of use to you. We're still live on YouTube. Got a few people listening down there, which is great to see. This all gets recorded, put onto the boot camp, which is available to people who are doing the CeMAP boot camp and the equity release boot camp as well. This all goes on YouTube now. We're going to turn this into a podcast. You can listen to this as well if you want to, with some snazzy music to finish off with, if that's what your cup of tea is. Talking about a cup of tea, I fancy a cup of tea, so I'm going to go and put the kettle on. And we've got the builders upstairs, so we're in the basement down here, the studios, you see. Upstairs there's builders, and they've been very so quiet for me, so I think I'll go and walk with the cup of tea and some biscuits. See you all next week.